Welcome to Financial Issues, where we help you steward faithfully by honoring God with your investments. Now listen in as we give you the practical tools.
Integrity. Great to be here with you folks. On today's show, we've got Stefan Padfield joining us from the Heritage Foundation, doing a little post-mortem on Pride Month 2026. You're going to want to stay tuned for that. Seth Sam Case, and of course your host, Mark Manila.
Well, good morning, everyone. Welcome to Monday. Happy Monday, right? Everybody smiles. It's that day of the week where everybody just wakes up with smiles on their face, excited to get up and go to work.
That's right. And Mark,
he's projecting that out.
Their heads.
Right.
He's wishing it to be so.
A nice big yawn and said, "I'm tired."
Mark, stop it. That's what I hear. My alarm just went off. You're bothering me. Well, here's some good news then. Today is Monday, and every Monday we're bringing you a new weekly verse for you to memorize and help you to embrace the Word of God, not only for your own life, for the lives of others. And in doing so, you also have ammunition and power of God's words to help people invest with biblical integrity. Today's verse is 2 Corinthians 6:14. Do not be unequally yoked together with unbelievers, for what fellowship has righteousness with lawlessness? And what communion has light with darkness? It's a little longer than our last two, but I really like it. And I found out here, it's really funny, you know, I thought to myself as I said I really liked it, is there a verse you don't like? And then it occurred to me, yeah, there are. There's some that just make me think too much and reveal too much of my my dark side, unfortunately. But this verse doesn't do that. It helps me to embrace those things that God would want us to embrace. And I also found out, and maybe I'm not correct on this, or maybe I'm misunderstanding, but Seth and Sam, this verse is really important to financial issues from the beginning, isn't it?
It is, Mark. Yeah, I mean, when we talk about, you know, being yoked with, for example, being yoked with a company that is non-biblically responsible, that's a form of being yoked together with darkness, light with darkness. Mark, it's interesting. My pastor gave a sermon yesterday about marriage, actually, and he talked about this idea of being unequally yoked, and that imagery is actually quite agrarian, and it's the idea of having two oxes together of equal strength, being able to work together. You would think it'd be rather silly if you had an ox and then like a cat or a frog or something like that. It wouldn't be able to work as well because they're unequally yoked. It's that idea. And so, yeah, this is a tremendous verse here, and it speaks to that idea that we cannot have any fellowship with darkness. If we're of the light, can't have any fellowship with darkness. Simple as that.
It's very strong in that, because back in that day, if you had a weak oxen and a strong one, not only was it hard to keep them doing a straight line because the strong oxen would pull it off course, and so you'd be running over old places that you already dug up and stuff. But it was very hard for the farmer, for the person that was guiding these. So it's hard on everybody when that happens. It's not just the two that are trying to work together but can't, but it also affects everyone and the future. I mean, think about this farm that they're trying to plow and they can't get the line straight, so it makes it harder to weed, makes it harder to harvest, makes it harder across the board. And then it may even cause the harvest to be less. So there's so many repercussions of being unequally yoked, not just for yourself, like we talk about with stocks, where you're 1/1,000,000th of a holder in the stock, so your vote really doesn't have any influence or affluence on the company. So you're unequally yoked with them in that sense. But by being unequally yoked, you also, especially if it's with darkness, you then are being dominated by that darkness in participating with them, and you don't have any choice. You can't change it. It's not like you can go in and do it all by yourself.
It's going to veer you off the path, off the straight and narrow.
Absolutely.
Yep.
Absolutely. Very strong, and I can see why Dan, if that's what you were telling me, if that's the way I understood it, Dan, this is an important verse to Dan from the very beginning. And it has been for me as well. This has been one of the stronger verses for me, especially trying to help people understand that when we buy a stock, we are actually becoming a partner in that company. We are an owner, and as an owner, we're participating, a partner, and we're participating in the good and the bad of what that company does. And unfortunately, if you don't have any control, if you're unequally yoked and the big ox is controlling the direction, you go with them on that. And unfortunately, you go with them if it's a bad direction.
Yeah. Well said, Mark. Hope you all can take this verse to heart this week. We'll be coming back to it often. Well, guys, the markets Friday stayed rather flat throughout the day. Friday's bell, of course, saw the Dow Jones and the S&P 500 pretty much flat. The NASDAQ was slightly lower, down a quarter. The Russell 2000 slightly above. Pre-markets, Mark, are really feeling well this morning, though. Looks like tech shares are up. It looks like the U.S. and Iran agree to halt hostilities, so I guess there was a break in the...
Yes, there was a little bit of a tit for tat over the weekend.
What a surprise.
Yeah, I mean, we've never heard that before.
Yeah, seriously. Hey, folks, listen, if you want to get a good perspective on this, we had Frank Gaffney on the show. Gosh, was it last week, Sam, or the week before? I can't remember what day it was, but we'll try to find that date for you, and you can go back and listen to that interview. He gave some great insights on this Iran war and what to make of all of it. So,
well, he makes such a good point in that interview that it's not even really a deal that we have. It's a memorandum of understanding. And even Trump said that recently. They said, well, what if Iran breaks the deal? Will you break the deal? He says, there is no deal. It's a memorandum of understanding.
Yeah.
If I don't like how they're understanding things, I'm going to blow them up again.
Oh, that sounds so Trumpish.
I know, right?
So Trumpish it is. So there you go. So that's what we're looking like this morning, guys. The market's feeling pretty good. Oil is up slightly on this, whatever the nonsense is in the Middle East there, but only still around $70 a barrel, Mark. So liking to see that for sure. I drove by several gas stations in Pennsylvania here where gas prices are a little bit higher than in other states, under $4 a gallon at each.
I think the average is around like $3.86 nationally.
Yeah.
Yeah, we're in the mid 350, 360 area here.
Well, aren't you just lucky, Mark? No, I get it. No, it's good. We're seeing that creep down.
Did I hear a sense of jealousy?
Listen, I'm super jealous because you've also got the FISM bunker over there in the Midwest.
That's right.
I don't think we have a bunker here. So anyway, 610-363-1110. Hey, Mark, listen, we're going to have Stefan join us shortly here. But I think it's just a good opportunity for us to remind ourselves about stewardship and patronage. Stefan is more in the impact investing, kind of the patronage model of fighting against the darkness. And obviously, we're more in the stewardship, biblically responsible investing model. How should Christians utilize both of these, though? I think both can be used well, and we should look at people who do it Stefan's way as allies. So how do we use both?
Yeah, well, yeah. And what he does is they have people that approach the board of directors that actually try to get the board of directors to move in the right direction, which is really cool. I think that's a great way to move. But BRI does its own work in the sense that when we buy a stock, and when many of us buy that stock, we are actually endorsing that stock with our money. We're showing that we're supporting that stock because we're willing to be an owner in that company. We're also showing a lot more than that. Our ownership and our stewardship over that says a lot. When we get together as a unit of Christ, when we start buying stocks in a way that honor God, what happens is, yes, we move money away from that stock, and at times it does cause that stock to pull back a little bit. Whereas if we just let all the money flow into it, it endorses it, and it could cause it to grow and give them more power to borrow and issue more stock and do all sorts of things, and do all sorts of craziness with it. So I think there's multiple, there's more than two ends to this candle. Actually, I think this is a three-ended candle. We have things which is patronage. That's like going to a store, buying stuff that this company makes and patronizing them that way. We have investing, which means we become a partner. And then we have people that that spend their whole life trying to get people on the board of directors, trying to get different things passed through the companies to bring them back in line with godly stewardship. And that's why I'm really interested in this interview we have coming up next in just a moment or so, because we can, some people would say attack from all sides, but I think love on corporations from all sides. You know, it's called love. It's love when you correct somebody for the right reasons. It's war when you're going against them and just fighting with them. But if the goal is to change them to honor God, I think that is an act of love. And we really want to do that. And that's why you're going to want to hear this interview coming up next as we go into the second segment of Financial Issue. The number here is 610-363-1110. That's 610-363-1110. We'll be taking your questions in the third and fourth segment here, so you might as well start getting in the queues as we gear up for that.
You never have to lose access to Financial Issues. Stations change programming, shows come and go, but your connection to Financial Issues doesn't have to. With the website and app, Financial Issues is available whenever and wherever you need it. You can watch the show live, listen on the go, or catch up on episodes you've missed with on-demand access to previous broadcasts. You'll also get the complete Financial Issues experience, including exclusive bonus content like Friday's Overtime segment. And it gets even better than that, because the website offers even more ways to stay informed and engaged. Be part of the conversation by joining the live chat during the show, read articles and market insights, and explore educational videos to help you become a better steward of God's resources. So what are you waiting for? Download the Financial Issues app or visit financialissues.org today. Stay connected, stay informed, stay with Financial Issues anytime, anywhere.
I remember my life before I met Jesus. I was most of the time afraid. I remember one of my teachers gave the classroom an invitation for Crossroads. When they talked to me about the love of God, I felt a sort of peace in my heart. I will commit myself to learn more about God's Word, to be able to share the gospel to others.
To help reach more kids like Louise with the life-changing hope of the gospel, visit reachOurSchools.com.
If a woman sees her baby on ultrasound, it doubles the likelihood that she'll choose life. On top of that, we share the gospel of Jesus Christ with her. This is why you should support preborn.
Then they sat me down. If you were to die today, do you think you would go to heaven? And I was like, no. Keeping the child was my first stepping stone. And ever since then, God has cleaned me up from the inside out.
Help support women in need. Go to preborn.com/FISM.
It's great to have you folks. Give your call up now, 610-363-1110. Today's show is brought to you, of course, by our friends at the Timothy Plan. You can check them out, timothyplan.com. We love the work that they do, biblically responsible options for investing for you, timothyplan.com. Hey, Mark, real quickly, before we get to this interview with Stefan, I'm really looking forward to this. I just wanted to remind our listeners that you got to make sure that you have access to financialissues.org/watch or the FISM app. Sometimes radio stations change, TV stations change. We go on stations, we go off stations. That kind of thing happens, but you will never lose us if you've got financialissues.org or if you've got the FISM app. So make sure you got them.
Things change, but the FISM app is forever, right?
That's right. Yes. And we're glad things change, and we're glad there's people out there trying to make things change, because if they didn't, they just continue to crumble and decay, and corporations would get uglier. But we have people like Stefan Padfield, principal for the Free Enterprise Initiative and senior legal fellow at the Heritage Foundation, joining us right now. Welcome to the show, Stefan.
Thanks so much for having me. It's great to be here.
Well, we're glad you are here. Give us some updates on what's going on with the Free Enterprise Initiatives, maybe some shareholder proposals, new ones that are happening.
Sure. We're definitely starting to ramp up a little early this year in drafting proposals and even getting a few out there. I think one of the issues that I'm really interested to see get a little more attention is a type of proposal that we refer to as an ESG ROI proposal or a DEI ROI proposal, which is basically asking for the data, right? Where is the return on investment when you have, right? Pages and pages touting your investments in ESG and DEI, and you cannot even find the phrase return on investment. So I think those are going to be some interesting proposals as we continue to expand those. But more generally, we just had a really great event at the Heritage Foundation, basically back to business, returning focus on ROI. And we had some great speakers. This was just this past Tuesday. And basically, your listeners and viewers can go to heritage.org and also to the Heritage Foundation's YouTube channel, and they can find the entire discussion is about an hour and focusing on things like what I'm referring to and what others have referred to as the great corporate governance realignment, right? Between the fact that we've got corporations leaving Delaware and going to Texas and Nevada, the fact that we've got the SEC stepping back from shareholder proposal, basically refereeing, the fact that we finally got some real strong presidential pushback on ESG and DEI and how that is really changing the landscape is something that I think is well worth discussing, and happy to do so more here with you.
What did you mean by SEC refereeing?
Yeah, so they basically, under Rule 14A8, they basically have put themselves in the position for a number of years. I mean, we can go back almost a century, I think, where the shareholder proposal process basically runs through them. And specifically when corporations want to exclude a proposal that a shareholder otherwise has a right to put on a proxy statement, they have historically gone to the SEC and asked for what's called a no action letter, basically a letter that says, if you exclude the proposal and everything you're claiming in terms of the background facts is correct, we, the SEC staff, will not take any action. And that's given corporations a lot of comfort when they get those. And they've typically gone ahead and added the proposals when they haven't gotten that letter. Well, this past season, the SEC basically said, we're not going to opine anymore. They did say that if you submit basically a bald assertion that you have a reasonable basis for excluding, that they will essentially honor that. And so there's been a lot of, concern and prognostication, on what the implications of that are. And that's certainly something that's evolving, and a lot of people have different opinions about how that's going to ultimately play out.
So it sounds like there was a lot of shenanigans going on in the last administration, even in the SEC, huh?
Well, I think one of the things that people have been concerned about is the expanded scope of what shareholders could claim allowed them access to the proxy statement. And so you started getting more and more radical proposals that seem to be further and further away from the bottom line, focused on social and environmental issues that were really disconnected from a particular corporation's, bottom line. And so there's been some concern about that. And I think, Chairman Atkins and others at the SEC are trying to rein that back in. I think broadly, this also came up at the panel discussion, and I think it's a great point. Chairman Atkins has been really focused on making IPOs great again. And that means, he's really run with that phrase. And that means reducing the costs. And one of the costs that he sees for public corporations is having to deal with a lot of shareholder proposals that seem to be far afield. We at the Heritage Foundation, we try to make sure with every proposal that we submit that we are very clear about the direct connection between what we're asking for and the bottom line, right? But not every shareholder proposal does that. And so I think there's something to be said for trying to tighten that up in one way or another. Now, we'll see what happens, because there's a possibility that by the SEC stepping back and essentially opening the field for it to be a state-by-state endeavor, it's time will tell whether the benefits of that outweigh the cost, because there certainly will be some cost. There probably will be increased litigation. There's a potential for a decrease in accountability. So we'll see how it plays out. But I think there's some good intention behind the way this is heading.
Well, that's, the bottom line issue is the second biggest issue I've had with the whole DEI, all the wokeism that went in on all the corporations over the last 10 years. The first, obviously, is the offense to God. But the second is, why should 10 or 12 people sitting on a board of directors determine to take my dividends and spend them on some cultural influence that goes totally against what I believe as a Christian? I just felt that was wrong. If you want to take our money, the stockholders' money, and spend it on something other than making more money for the stockholders, I think all the stockholders should get a vote in that.
Yeah, I think this is a great place where, we also mentioned coming to the end of Pride Month and how corporations have, toned it down, it seems, when you look across the board, although there are certainly many that are still seemingly all in and even doubling down. But to me, one of the critical issues here is the fiduciary duty of care, which requires corporate decision makers, directors, executives to make fully informed decisions. And I think in a lot of these places, DEI, ESG, supporting Pride events, it doesn't seem like the questions that should be answered, like where is the ROI? What data are you collecting for the ROI? When it comes to Pride events, what does it mean to support a Pride event? Are you saying that this corporation supports the idea that a child can be born in the wrong body, or that a male should be allowed into females' sports and spaces? Like, is that what you're putting the corporation behind?
Brother.
You need to at least answer those questions, it seems to me, in order to say you've satisfied your fiduciary duty to make a fully informed decision. And I think that's really one of the places where there needs to be some continued pressure on these corporations. It's not even so much that, if a certain corporation answers the questions and is fully informed and decides, yep, we're still all in on this, okay, then the marketplace will decide. But when you're making the decisions on the basis of just like vibes, or, you want to avoid the leftist mob coming after you, or whatever it might be, that's not fully informed and focusing on the ROI, that's a real problem.
Yeah, it absolutely is. And I've heard some people in corporations, very few because I'm not that well connected, but a couple of people on a couple of boards say one of the reasons they do that, they went with it, is to avoid all the lawsuits. They thought if they did not get behind these things based on the administration's focus and the direction that the administration was influencing everybody to go, that they would allow all these lawsuits from these fringe groups of sexually moral people to come against the companies, and then they'd have to spend all this money on litigation. So their ROI was not having to spend that money by just donating a fraction of that. You think that's true, or is that an excuse?
I think that's definitely part of the story. Certainly under the Biden administration, that was a real risk if you didn't jump on board and get in line with like even the most extreme leftist agendas that were coming out of that administration. But at the same time, I think there's also a little bit of a, bait and switch or shell game, whatever you want to call it, where, they go to the most woke law firm, and that law firm just tells them, oh, yes, you absolutely need to discriminate on the basis of race. Otherwise, you're going to be sued for disparate impact, right? And then sort of everybody checks the block and sings the same tune. I think what's critical is there anybody in the room who's steel manning the other side? Are you really being express about where do you precisely see the legal harm and risk? And here's the other thing. If you're doing something purely as a function of risk mitigation, then say so, right? Don't flout it in the guise of, oh, it's good for business, if all you're doing is trying to avoid a lawsuit, right? Like, yes, broadly, that's good for business. But most people, when they hear good for business, they think, oh, it's going to make a profit. It's going to improve the ROI, right? So if you're just doing it because you're afraid of the Biden administration and you're afraid of getting sued, some version, I know you're not going to say that precisely in those words, but clearly say, hey, we're doing this as a matter of risk mitigation. But you start to see what's really going on when they won't say that out loud.
Right. Well, based on all that, it seems like we're having a reversal in trend here on the support for, like, this is supposed to be Gay Pride Month or Pride Month in corporate America, but I haven't been seeing as much of the Pride stuff going on as we did in the previous years of the previous administration. Is this due to Trump, or is this a serious cultural change, or do you think that maybe they're growing a spine?
I mean, I hope the latter is true. This was another comment that was made at our event by Jerry Boyer. He basically pointed out, we've got supposed Republicans and conservatives on these boards, but where is the backbone, right? Because they seem to have been fully on board with a lot of these agendas. So I think it's really everything you mentioned, right? So I do think that the Trump administration has been very clear about what is included under the umbrella of pride and particularly transgenderism, right? They have not minced words about the sexual mutilation of children, right? And so I think that has really been a wake-up call to people. The fact that the Trump administration has been very clear about the fact that they will use the powers available to them to come after actors who are harming children and otherwise,
praise God,
harming women, right? And so I think that really matters. But I also think we've had some time for it to sink in culturally what actually is being said and done and what the goals are here, right?
And people to work it through. Yeah. In the last few seconds we have, where can people get more information, Stefan? Because this is so important, what you're doing, what the Heritage is doing. How do we get more information?
Yeah, first easy stop is just at heritage.org, and you can also find me on X at Stefan Padfield.
Thank you so much, and thank you for taking your precious time and coming to talk with us and our partners and all our listeners. We appreciate you, and we appreciate the work you do. God bless.
As a member of Samaritan Ministries, your monthly share is a gift that goes directly to a real person in need. While that share takes care of the financial portion of a need, medical needs are complex and include the physical, mental, emotional, and spiritual aspects as well. While the financial gift is important, if we stop there, we miss an opportunity to minister to the whole need of our brother or sister. When you faithfully pray and send a note of encouragement and scripture along with your share, those words become a vessel of God's continued healing and blessing on the receiver. And the impact it has is immeasurable, bringing glory to God and provision and unity to His church. Glorify God with your health care. Send a note this month.
Preborn is making motherhood possible for thousands of moms across America.
I found out that I was pregnant, and my family, they were like, no, you're not having this baby. I met Miss Linda. She told me about all the great resources, like they offer free baby clothes, they offer free classes, stuff for her mom. She prayed with me. She told me to ask God to, guide me to my decision. She made it completely like my choice. She offered to get me an ultrasound, and I found out I was 6 weeks pregnant. That's where I very first heard the heartbeat of my son, and I was told, whatever I gotta do, whatever comes my way, I'm just gonna, have this baby. It was really a great thing that I was led to the choice to keep on.
To find out how you can support the life-saving mission of Preborn, go to preborn.com/FISM.
You're careful about what you bring home when shopping, especially when it comes to feeding your family. Shouldn't your investments work the same way? At Timothy Plan, we offer a wide selection of mutual funds and ETFs that can help you allocate assets without compromising your values. From technology to healthcare, energy to real estate, our funds are not only diverse but uncompromising to your values. Timothy Plan funds are filtered to avoid companies involved in abortion, pornography, human trafficking, and other harmful agendas. What you invest in should reflect what you stand for. Are your investments bearing good fruit? What's in your portfolio? Contact your financial advisor today to find out, or contact Timothy Plan directly at 1-800-TIM-PLAN to discover more. Before investing, carefully consider the fund's investment objectives, risks, charges, and expenses of the investment company. This and other important information can be found in the fund's prospectus. To obtain a copy, visit timothyplan.com or call 800-846-7526. Read each prospectus carefully before investing. Investing involves risk, including the potential loss of principal.
Boy, it Always great to be here with you, folks. We are thankful to have you. Mark, it was such a joy to have Stefan on in that last segment. Yeah, check him out, folks. Yeah, heritagefoundation.org. Stefan's a great follow on X, by the way, if you are on X.
Oh, yeah.
So, yeah, give him a follow, please. Mark, that interview brought a question to mind, and I just love to ask this to you, Mark, to kind of connect it back to what we do at Financial Issues and to our audience here. Is there ever a time when, stewardship, or maybe it's better to call it biblically responsible investing, is not enough, and we need to take the extra step and do boycotts or do impact investing or something like that?
Yeah, a boycott is that usually I used to just talk about the two ends before people like Stefan were around, or another friend of mine who does activism, stockholder activism. But one end of the candle is not owning something that you don't want to be part of that offends God. The other end is not patronizing or companies, organizations. For example, for many, many years, I didn't shop at certain big box store because of their promotion of LGBTQ stuff. I find it very important. To this day, I still don't drink unless somebody gives me a coffee from Starbucks, because they outright said if Christians don't like what we're doing or what we're promoting, then don't buy our stock. So I don't buy their stock, and I don't patronize them either. I don't spend my money there helping their profits. So both ends of the candle are very important. I have a lot of respect for people who stand under values and morals just universally. But then again, we are in this world. So there's some things that happen. For example, it doesn't matter what cell phone you buy. There could be a Christian startup that everybody there truly loves the Lord, and they don't want to offend God in any way, and they do everything possible. And what they do is they have cell phones for people, and yet those cell phones are still using AT&T lines and T-Mobile lines and everybody else's lines, and paying them as you pay the Christian phone company. So effectively, they're getting money. So what do you do?
I think of computers. Everyone is using Mac or Apple, pretty much, unless you're using Linux.
There's two operating systems. Well, there's a handful of people.
Microsoft, Sam, right?
Yeah, exactly.
Yeah. So there's a handful of people in the U.S. who, like you said, use Linux or others and stuff like that. But that's about it. Most people can't because they're not programmers. So the thing is, Jesus walked the Roman roads. That's the thing. He was in the world, not of it. So he didn't avoid those things, but he avoided anything he could while being physically here in this world. He avoided anything that would offend his Father. So that's very important. We do the best we can as often as we can. And if you just strive for that, I believe you are honoring God. I would not let my family starve because there's no grocery store I can shop at, because somebody in the grocery store business executives made some stupid remarks or took some of the profits from the store and did some stupid stuff with it. I would not let my family starve, but I would try to find an alternative if there is one.
It's well said, Mark. I think you can apply the same wisdom to churches as well. I mean, you're not going to let your spiritual life starve by not going to church just because the church happens to be full of sinners. If that's your metric, there are no churches for you. I hate to break it to you. Any church that
you have sinners at your church?
A sinner, by the way. What's that, Sam?
You have sinners at your church?
My church is perfect.
Oh my gosh, I can't believe you go there.
It's crazy. But that is it, right? I mean, we so often forget the moment that I step into a church, there's a sinner in that church. The moment that you step into it, there's a sinner in that church. So, Mark,
but more so you, but yeah.
Well, more so me, yeah. I love it. No, that is great stuff, Mark. Thanks for sharing that insight. We have a similar kind of minded question here from Michael. He's 56 years old. He's asking, hey, everyone, I recently used the evaluator tool to screen a couple of my Vanguard funds. There's one, it's the VTTHX fund. It's one of their standard retirement funds, Mark, and it is dirty, no surprise.
Yeah, it's a dated fund.
Yep. It's got about a 40% violation. But then their money market fund, that's VRMXX, was not found. So I assume that it is okay. And I believe Michael's right there, Mark, that one it technically would be clean. So he's saying, how do I change the mix in the retirement fund at Vanguard? Or should I leave it all together? And what fund should I go in? What's your best advice for this?
Well, you can't change that. You're not the fund manager. So what they do is they come up with asset allocation models, and each year they change them, lean more and more conservative as you get older. It's called target date funds. Now, you can choose different target date funds, but that doesn't mean they'll be clean. In fact, I don't know of any that are from them. Yeah. So the key here is not to move it to the money market just because that screen's clean, but to find funds that are in alignment with where you're at in your journey to retirement or your financial journey in life. And you can do that by going to the Partners Hub, looking up the asset allocation models, and then choosing from the broad list that we have back there, the buys in it to fulfill each of the sectors. So if you find an asset allocation model that fits where you're at and you want to fill it, it's really easy to know that it'll be totally clean because we have a list of what's called buy. Anything on the buy or hold list is clean. It's biblically responsible. So you can move into that. If it's on the buy list, we still believe it's worthy of new money. If it's on the hold list, it may have ran up so strong that we believe it might be a while before the profits really are worthwhile. So we put it on the hold, or something's breaking down internally and we're watching it to make sure it doesn't continue to break down before we tell new people to put money in it. So you could do that all inside the Partners Hub. That's what it's there for. That's what we're here for. We're here to help you to invest with biblical integrity and realize God's provision for you, not just in eternity by glorifying him by the way you invest, but by having real world results here and now with the portfolios that we give you guidelines on. Now, we don't tell you what to invest in. We help you make decisions by giving you information and the tools to make those decisions. We are very excited about being able to do that for you. So, Michael, I would really encourage you to go to the Partners Hub, start watching some of the videos, start looking at the asset allocation back there, and start choosing the funds and or individual securities that match your moment in this journey of financial journey and honoring God.
Well said. Mark, can I ask you a follow-up question with that? Okay. What if, let's just say hypothetically, Michael's thinking, I really want to know a specific fund I could go into. The Timothy Plan Fixed Income ETF, would that be a possibility?
Well, it depends. When he says he was thinking about moving money to the money market, that tells me he doesn't want any risk. But then when he's in a target dated fund, he's got growth stocks, he's got income, he's got everything. And I don't know, I don't remember what he said his age was, like
56.
56. So he's still on a growth income type of risk possibility. And so, he could have a little bit of that. There's a lot of great Timothy plans. If you want to keep it simple, you could just go into the Timothy Plan Conservative Growth Fund at this point, and then maybe offset that a little bit more with the new fixed income ETF. And by the way, soon we'll be sharing with everybody our new ETF asset allocation models as well. So right now, that's the direction I'd go. If you feel like you don't want to be all growth, well, you could go into the conservative growth and offset it with maybe 30-40% of the TPFI index fund.
That's great. 610-363-1110. Mark, let's do a quick one here before the end of the segment. Noah's 39, and he's saying, Mark, I'm wondering, are there any biblically responsible quantum computing positions that we may be able to invest in? I'm just wondering your thoughts on that. Good question.
No, I love it. You're thinking ahead, and that's good. You're watching the trends, where they're going, and that kind of stuff. Quantum computing is really a what's the best way to say it? Not a mature industry at this time. There are quite a few, like IonQ and what was it? D-Wave, quantum and whatnot. And then there's things like that aren't clean, like IBM and Alphabet and Microsoft. You know, the mature ones, the ones that you could trust, are dirty, and the ones that aren't dirty don't even have profits. Most of them don't have earnings. They're in such a early stage. So at this point, I'm sitting back waiting to see where things are going, waiting for them to become larger and show that they actually can monetize what they're doing. And it's not all research. It's not like the internet bubble. And, you know, just because somebody put .com at the end of their name, people were investing in it, and they had no earnings and they had no profits. They had no, some of them didn't even have revenues. So a lot of these are at that stage. So I can't really, I would not endorse any of them, you know, Rigetti or the others like that. I wouldn't endorse them. And I definitely wouldn't endorse IBM, Alphabet, and Microsoft because they're dirty. So, yeah, it's really hard. So at this point, nah, keep looking, keep watching. Something will come up sooner or later. And sooner or later, you could call in with your questions, 610-363-1110, 610-363-1110. Give us a call.
My name is Reagan Gardner, and I am in the 4th grade. Last year, I wanted to be like everybody else. I thought I had to act different, look different, and be different to be cool. When I joined Crossroads, I learned that God loves me just the way that I am.
Help reach more kids like Reagan with the hope of the gospel. To learn more about Crossroads Kids Club and how you can get involved, visit reachourschools.com.
I found out I was pregnant when I was 21 years old. For me, I was scared, I was shaking. They do an ultrasound, and that's when everything changed. When I saw my baby and when I heard her heartbeat, that was it. We've seen the hand of God ever since we stepped into the pregnancy center.
To find out how you can support the life-saving mission of Preborn, go to preborn.com/FISM.
The opinions and recommendations expressed on this program do not necessarily represent the opinions of the station or any of the program sponsors. Additionally, all products or services offered by the program sponsors may not be known by the program.
Great to have you here, folks. 610-363-1110. And just a reminder, again, have access always to financialissues.org and the FISM app. You'll never lose us there. So make sure that you have that. Specifically, financialissues.org/watch, where you can get our live chat as well. 610-363-1110. Mark, speaking of the chat, we got a good question here from Jane in your home state of Missouri. She's saying, if I read the buy list correctly, do we need to be concerned that FP16, that's WAFDP, cut its dividend in half for the month of June? That's actually coming due tomorrow, Mark. Should we be concerned about that?
Yeah, I don't think we should. I'm going to dig deeper, Jane, just to make sure. But I think that we're getting some some information mixed up. It doesn't look like the preferred cut theirs at all. It looks like it's still the same. Maybe what happened is that the common stock may have been cut. So I need to look at it and make sure, though, because I didn't see it when I was reviewing it earlier this week. But I'm going to dig into it, Jane, just to make sure. And if you're in the chat tomorrow, what I'll do is I'll put it in there, or we'll bring it up on there. But I believe it's a misinformation between the common and the preferred.
Yep, perfect. And Mark, if that happens to a common stock, it sounds to me like from what you're saying, we shouldn't be too concerned that it would impact the preferred. But could it impact the preferred at all if there is something like that negative that happens to the common stock?
WAFDP is a non-cumulative preferred, so the dividend is paid only when declared, and that means we always keep an eye on this company's strength and dividend coverage. But for now, I don't see an issue at this point. I'm not seeing what maybe she's hearing or seeing, or where that information came from. So that's why I said I don't have time on the air to dig in deep enough to make sure. But my first initial reaction is no. We don't have to worry about it on the preferred right now.
Absolutely. You know, Mark, one of my favorite hobbies is bouncing around on our show notes and not going in the order that we set the show notes.
Yeah. Oh, good. I was afraid you were going to say stamp collecting, and I was going to get scared for you.
This is a much more fun hobby. If you could see our show notes, folks, it'd be like just you're on the trampoline. So, Mark, I'm going to jump down to one of our other questions because it's also about WAFDP. John is asking that our website shows it as a dividend rate of about 3.3%, but Fidelity shows the coupon rate is at 4.8%. Mark, I've also heard that this particular position has a dividend upwards of 7%. So what do we do? What's the dividend of
we guess?
Well, it's really funny because, John, I appreciate that question. But sometimes I'll be talking with other analysts and stuff, and one will say, well, you know, they have a dividend of this. And I'm like, wait a minute, I'm showing this. And then a third guy will jump in and say, no, on what I'm looking up, it shows this. And they may be similar, but they're different. And then sometimes somebody would say, are you looking at the dividend rate or are you looking at the coupon rate? So first you got to get that straight. The coupon rate is what they declare at par when they issue the stock and or the preferred and or the bond. So that tells you what they're going to pay, like 50 cents on $1,000 or whatever. But as the price of the security changes, so does the yield. So that may be what the issue is. And then you have the yield as of what time today or yesterday or last week that you calculated the rate. So that's what comes down. And on our site, I think we update the yield on it maybe once a day in the morning or something. So if you're looking at it in the evening and the stock fluctuated anything seriously, it would change what the yield would be.
Makes sense, Mark. Thank you for that. John,
so just to clarify that, coupon rate, interest rate based on the bond's face amount. Yield is what you actually earn based on the price you paid.
Very good. Very good. Thank you for that, Mark. John, it's a good question. Here's another one, Mark. Craig is 40. He says, I'm looking to invest in aggressive growth stocks currently on your buy list. Is there one or two that you might recommend the highest as of right now?
Well, Craig, I'm glad you're 40 when you're asking that, because there's a lot of volatility and risk, downside risk in a lot of the stocks that are in the aggressive portfolio or in the aggressive designation. Remember, we call them aggressive for a reason, and usually it's because this company has a lot of potential, but it's also a lot of that potential has already been realized in the price. So, yeah, there are stocks I like. There's none I'm going to recommend, obviously, but I can tell you that some of them that have incredible potential are like the TE27, TE39, UT36, and TE8. All those have great potential. And at 40, you have the potential to go ahead and jump into those if you wanted to. But remember, they are highly priced. They are way up there. And they may pull back, and it may take a while for them to catch back up again. If you have the time to be able to weather that, that's fine. But right now, you got to be careful with where you're going with aggressive stocks. I do not recommend them ever for people who need more leisurely ride in their financial journey, because they hit a point in life where those monies are absolutely necessary to support their lifestyle in one way or another. If you're not using them for lifestyle and you have plenty of time and you're not worried about losing a big chunk of money for 3 to 5 years or so, if something gets stupid and pulls back and they don't realize the perfect execution of the projected growth of these companies, you're good to go.
Just know you're buying a ticket for the roller coaster.
Yeah. And if you can't sleep at night with the pullbacks and the bottle rockets, you shouldn't be in there. That's why it's called aggressive.
Yep. Speaking of the roller coaster, guys, the markets are all looking very positive, especially the tech-heavy NASDAQ is up over a full percent right now. So each of the major indices looking handsome this morning in the green. 610-363-1110.
What you're telling me is that, who was that? Was that that we were just
Craig?
Craig, it sounds like you're... today's the day, huh?
Yeah, right. Jump on the roller coaster.
Yeah.
That's right. Good stuff, Mark. Next question, Mark, is from Bert. He's 63. He's saying, Mr. Mark. Hello, Mr. Mark. What are your thoughts on MKSI? It was on a sell alert back in August of 2024 for market deterioration and raising cash. I wonder, Mark, if Bert maybe missed that sell alert, or maybe he's keeping an eye on this stock as well. What do you think, Mark?
Yeah, Bert, when something goes to a sell, we even take it off our watch list after 30 days. And the reason we went to a sell, obviously, there was a breakdown. There was a deterioration in the way it was being ran in the business itself. It went from good to mixed to poor. And also we saw that they were trying to raise cash in many different ways, not necessarily the best ways, maybe I believe what I saw looking back to that date, because I wasn't here when it went to that sell, but I saw that they were trying to raise cash, and I didn't see where they were issuing stock and diluting investors, or if they were just borrowing their way too high. So, but anyway, all that was why they went there. Since then, the business picture has improved. Earnings momentum is strong. The semiconductor equipment cycle has been working in its favor. It looks like a good company that has had a very strong move, but that doesn't make it a buy at this point. So my answer really is this. The stock is now overextended. Valuation is rich, and the balance sheet still carries heavy leverage. So my answer is this, Bert. MKSI is worth watching again. If you don't own it, I wouldn't chase it at this point. If you miss the sell and you still own it, well, you've seen some gains from it. So Stewardship says we can respect a strong company and yet wait for it to prove itself before we jump back in. So especially at this point in the markets, with what's going on in the markets, with so many companies individually being so overvalued and so rich in their valuation, any stumbling block could cause us a pullback, and I just wouldn't want to see that. So, no, I wouldn't be chasing it if I were you.
Absolutely. And Mark, you consider this too. Bert is 63. So, Bert, you might have some time, but we're not sure when you're going to retire. And, 63 is definitely, I think that's prime growth and income level, Mark. So it might not be the time for a highly aggressive move. It might be, but it also might not be.
Outside of the debt, the company is pretty good. So it's really the stock, the price of the stock, not the quality of the company at this point. They got a little bit more leverage than I'm comfortable with, but outside of that, they've made great improvements. So it wouldn't be one that I'm chasing, and it's not. I looked through it and I kind of put it on my sheet to occasionally check in, just for you, Bert. But right at this point, nothing in it tells me to move forward with it.
Yeah, good stuff, Mark. Hey, Mark, I got great news for you and for our listeners. Tomorrow, Craig Halgard's going to join us again for a live ag report.
Right.
I'm excited.
Live.
It's going to be a good time.
Yeah, absolutely. I love it. I love when Craig's on because he has such insights and he has something special to talk about tomorrow that's going to be very important, I believe, for all the steak lovers. And you're going to want to be here. Well, you're going to want to be here every day because 1, you love the Lord. 2, you want to invest with biblical integrity. And 3, we have a good time when we get together on financial issues, talking about these things and figuring out more and more ways.
To God, then we will be a nation going under.
Thank you for joining us. This has been an FISM production.
Well.